course, to some extent it is publicly available. So for example, for any domestic payments or for the highest transaction corridor, such as let's say within US or US to Canada or something like that, it is fixed. But then there are also a lot of dynamics in the take rate. So for example, that the current customer that we are working with right now has a separate project which takes care of only how to fix the take rate for a customer. Okay, and that depends a lot on what kind of a customer they are, what is the average transaction size that they process, and so on. So based on these factors and based on the currency corridor, and also based on the current market conditions of that particular day, a lot of these factors account for a variation in the take rate.
Okay.
So this is probably why they don't publish that one single figure for the take rate, because it varies based on the corridor, the currencies, the daily situation, and so on.
Okay. Yeah.
Any other questions? Okay, move on to the next slide. Okay. So now we move on to the partnerships and expansion part of the earnings call. So one thing that they have done is they have integrated with the PayPal app. They have integrated a service called Honey. Okay, so now Honey is a company. Honey was an individually operating company, but it was later acquired by PayPal. And what it does is it finds coupon codes across many websites and applies them. So when you're purchasing something, right? If you have this Honey API or that plugin, then it will automatically give you, hey, okay, so you're doing a transaction on this website, and for this website there is this coupon code offered by this merchant, and if you apply this you get X percentage off on this transaction, something like that. So
useful.
Yeah.
I actually have it, I have the extension on my Google Chrome.
Okay.
It doesn't work that well for India. I think for India, Coupon Dunia, stuff like that works better, but I thought it will work nicely, but it doesn't work. I think it's targeted mainly for the US audience.
Yeah, so basically it gives you the Amazon coupon, really good, but when you apply in Amazon India, it doesn't work.
Right. Yeah, I think PayPal, Honey, all of these things are right now more focused on the US market, US or Europe. So
Yeah.
Here
in India, if you book any flight ticket or any hotels from Booking.com, and if you use PayPal, they will give you a great discount. I think that could be a strategy for this.
Okay.
Yeah, same with NetMeds also. So the first time you buy something from, I think, I'm not sure if it still exists, but the first time you buy something, I got an offer about 600 for something about 1,000 rupees. So like the initial offers to get you into it was like really good, but nothing to keep you in, at least in India. I just installed, created an account in PayPal for that reason alone, and I stopped using it right after.
So on this point, Sanjay, I've got a couple of slides. So okay.
Yeah.
So certain additional features they have added, QR code scanning, buy now pay later, and also the cryptocurrency processing. And they have acquired this reverse logistics company called Happy Returns. So here it's a bit unclear as to what their objective is, because logistics is not related to what PayPal has been doing so far. So this acquisition is a very, very recent acquisition, and it remains to be seen what have been their motives behind this acquisition, how they plan to leverage this, and so on. So let's wait and see what happens in this area. But they have also expanded their agreements with Instacart, Gap, DoorDash, Adobe, Oracle, Salesforce. So this is like when we say agreements, it is basically a partnership. So DoorDash, for example, it's like a Swiggy or Zomato that we have here, food delivery app. And so when you use PayPal to pay on any of these platforms, you'll get a discount with that kind of. And they're also planning to roll out their other payments app, that is Venmo, with Amazon, DoorDash, and Starbucks. So quite possibly we will be seeing I mean, in the US that is, they'll be seeing an additional payment gateway for making your payment with Venmo when you're paying on Amazon, DoorDash, or Starbucks. And they've acquired a Japanese payments processing and buy no pay later company called Paydi. Okay. Now, just look at the points that I have listed on this slide, and whatever I have marked in blue, right? So all of those are those the so-called affordability constructs. So coupon codes, buy no pay later, and everything. And we can summarize that PayPal is making certain huge bets in this buy no pay later or this affordability area. This is also in contrast with certain other companies that we have seen. So Visa and MasterCard, last week we were talking about them, and we said that they were planning to focus more on the emerging markets, right? And their strategy is aligned towards growth, but here they're aligning more towards engagement and this affordability. So this is a market difference that we can observe in the strategies of Visa and MasterCard versus PayPal. Any questions on this slide? Okay, move on to the next one. Okay, so this current year they expect their revenue growth to be 15 to 17%, and they also mentioned that the number of digital wallet transactions is increasing at checkout. And these 2 points I just mentioned, MasterCard and Visa focuses on growth, especially in emerging markets, and they also are making huge bets in cryptocurrencies, digital currencies, and that advisory or consulting services. But PayPal is focusing more on engagement and affordability. Okay. And now I come to this point. Okay, you might have heard this in the news a couple of weeks back when they said that PayPal's stock price took a huge hit. Okay, so in the past 1 month alone, it fell by around 35%. So if you see here, it was towards the end of January or the beginning of February, it was hovering around $170. But then the current stock price as of yesterday was $114. Okay. So what caused a huge dip in this stock price? So Sanjay, now I'll come to that point that you were talking about. Okay. So you see the second point over here. Now in the fourth quarter, so this is a quotation that I took from that earnings call. Okay. So all of these points here are, that is points 2, 3, 4 are quotations. Okay. So they're saying that in the fourth quarter, in connection with the increased use of incentive campaigns throughout 2021, they identified 4.5 million accounts that we believe were illegitimately created. Okay. So when they say illegitimately created, what they mean is, so they were set up purely with the purpose of leveraging that initial discount or that incentive campaign, but then after that they will not make any transaction. So they launched a huge number of these incentive campaigns in that year, and with that they set a very ambitious target. They said that they'll grow their customer base to 750 million accounts, but then they found out that those customers who are coming via those incentives, they just come because of those incentives, but then they do not make any transactions after that. So that's what they're mentioned this next point. These programs are very successful in generating account creation, but these customers have lower engagement and higher propensity to churn, and they have not matched our required level of return. So due to this, they are saying that the focus from this year onwards will be on engagement. That is, whatever customers that we have today who we call as the active customers. So how do we keep them active? How do we sustain the number of transactions that they make? So that should be their focus rather than on growing their entire customer base. So this is the reason that their stock price took a hit. And they also mentioned that the growth was not as expected due to inflation and supply chain issues. So inflation is one more thing, big thing that is going on in the US today. It's the current inflation rate right now is around 7.5%. So inflation is to some extent it is healthy for the economy. So around 4 to 5%, I believe, is the acceptable range of inflation. Anything beyond 5% is bad for the economy, and the current US inflation is at 7.5%, and I believe it is at a 40-year high. So when there is inflation in the economy, so basically what the value of money decreases, right? So that's why they have inflation. And due to these issues, people were not transacting or were not making purchases as they used to do because of the price rise and everything. And this is the reason that they cite for their growth not being as much as expected. That's what I had on PayPal. So moving on, it's like a different topic. So we can continue, or take a pause over here.
All right. Okay, I think it's 10 o'clock. I think we'll pause now, Sai. So very quickly on your other point, I think really great coverage, Sai, of the earnings call. I think I just wanted to add 2 points here. Let me just very quickly share my screen. And I just saw, because we were thinking, can I share my screen, Sai?
Yes, I just stopped sharing.
So because we were just discussing why has the the revenue not grown so much, right? So one of the things I just checked is whether their pricing has come down, because that could be one reason why their revenue may grow lower than their transaction volume, etc. But I'm seeing the cut that they take, right, for payments has been exactly the same, because I have followed it for some time. It has not decreased when compared to what it was before. So this is just one point that I wanted to add. The second point that I would like to add is this. So we were also talking about the share price. I think this thing about trying to go after new segments, but a year or two later they say this is no longer working. We will sort of work on engagement, right? So that thing, I think this is the dip that you showed us just a few moments ago, right? This is the 20% odd dip. But if you look at it, even in this market where the overall stock prices have been going up, except for about the last 1 month, right? Even in that month, so I have selected 1 year, right? And even in that, it has been sort of going down. It was 300 a year ago, and now it is about 114, which is roughly 66% down in a year, when the market overall has been going up. Okay, so that's a very interesting thing to note. Okay, however, if you go a little longer, for 5 years, they have done differently. I think we can look at 2020 onwards, right? So this is the 2020, the beginning of the pandemic, and so when there is a wave, sort of everything goes up, and it has gone up. But in the last 1 year has been a decline. So this is something I just wanted to, so I think we can make our own meaning out of it. But I just thought I'll share with you. Okay.